All right, so last day of the boot camp for the year until next year, until January. Um, so I had marked this off last night. We had regular trading hours switched down to 1 minute. You can see here we had this opening gap where we closed Friday at 4:13, and then we opened back up, or we haven't yet, but we have this new week opening gap here. Uh, Electronic trading hours. We closed here on was it Monday, 18th December? Um, it's there. Where is that? Here. 'Anyways, this is where that opening gap was. And then um it was off the hourly, I think. 15 minute. Anyways, I was looking at price overnight last night. Notice we had this uh 15 minute in here, kind of in here as well, like this whole area, this gap and this gap, kind of tapped it in here. Started to reject there, and then boom, right to this new week opening gap. Our weekly opening is right in here. Um, so, like we talked about in two classes ago, if we're bullish for the week, then we should want to stay above this weekly opening price. Uh, so, uh, we want to probably look at some news this week as well. So when you're setting up for the week, right? This is the things you want to look at is going to be uh, look at the monthly, right? We have this high. We're starting to hit all-time highs on a lot of the asset classes, like the indices. US 30, new all-time highs. NQ, new all-time highs. And ES, we're heading for uh, this high here on the monthly. If we look at ES1, so we can get some more data, because the front month right now for March, we really don't get that far back of data. So ES1, the continuous contract, you can see we got these equal highs here that we're almost heading towards on the monthly. So the draw on liquidity overall, right, is still bullish. You want to start looking at the week, and we know that our short term for the week is going to be this high, and then we have some daily liquidity in here. Right. And then just working your way down, 4 hour, right? It's pretty clean highs in here. Right. This is kind of, if you notice, the bottom end here, it's kind of jagged, right? Whereas these are a little bit more, a little smoother in a sense. So it's going to want to take out a lot of this liquidity. Um, 4 hour, we're still pretty bullish. Let's go this one. So you can see we kind of have a inefficiency here on the 1 hour from this wick high to this wick low. We wicked through, tapped in that new week opening gap, and then we drove higher into here. We had this bearish gap in here that we've disrespected now. No, that's 1 minute, 1 hour. Right? And we use that support. We have a swing high in here. So, right, this is how we want to do our start the week, do our top-down analysis, and then look at news as well. Right. So this week, I think today, Tuesday and Thursday are going to be our best chances to trade during the week around the New York Open, CME Open, due to a lot of red folder news, orange folder news. So we could see after Monday, right after today, right, going into Tuesday, how is the weekly profile going to set up for Thursday? And we'll get more information on that after today, right? So let me go into the ICT extras here.
Hmm.
Gems. Let's go to Google Drive. So there's a link here on to the Google Drive for these for the weekly profiles. So I'll throw that in the boot camp there. But if we paste and go here, oh yeah, weekly profiles. Right, and what you just go through here and try to line up the weekly profile after we get some more data today off of the 1 hour. Okay, the 1 hour we're going to be able to see the best weekly profile, and then you want to pair it like let's see, Tuesday level week bullish profile, for example, something like this, right? Monday into Tuesday drop, Thursday, and then Thursday reversal. And if we're bullish, the profile you're going to be wanting to look for is bullish because on the weekly and the daily, we're expecting higher prices, right? For it to take out those monthly highs still. So we could get Monday into Tuesday, Wednesday drop down, right? With pairing with the news. and then Wednesday into Thursday continue higher. Um, right. So this is will help your short term and weekly objectives, intraday scalping to kind of help build that narrative or the bias, right? And then after you have collected some data, and you can also look at the dollar um, from the weekly standpoint. Um, we still have some equal lows down here, right? So if we're expecting the dollar to still expand lower, we left in these lows, right? So if the dollars can continue lower, this will line up with our bias on the indices to continue higher. Um, we also have this weekly fair value gap in here. Comes the daily. Now we could get a retracement into this volume imbalance this week, maybe with news, which would cause uh, the indices to drop, right? Which might give us this Tuesday into Wednesday drop paired with news, paired with intermarket analysis of the dollar, right? So see how we're kind of connecting everything together to create a story that and everything lines up with each other. So you look at the dollar, look at for your news for the week, um, and looking at the hourly to line up and looking at top-down analysis from the weekly, daily, marking off your PD arrays for the week and the day. And then going from there, right? So now we will know for the week where we're at in price from a top-down analysis standpoint. We know what we're expecting the dollar to do. We also know where we're at with the news for the week, so we're not surprised. And then we're kind of getting an idea for the weekly profile off the 1 hour on what to anticipate short term, right? So, that being said, the next thing we want to wait for, um, which is uh, the most important element, is time. Where do we go here? Where was? Yeah.
Oh,
What's that?
oh,
All right.
Let's fucking go, man.
Someone trading. Like my computer's being slow. All right. So example, right? Top-down analysis. So we start here on the hourly. So we're mainly most of us are intraday day traders, scalpers, right? We're in and out of the market really quickly. So, and this is my favorite style to trade. This is how I trade. This is how I look at the market, how I read price using these concepts. So, um, using the hourly 4 hour, right, as PD arrays, liquidity short term, right? Allen's favorite time is 4 hour gaps to 4 hour gaps, things like that to use as draws on liquidity areas. So if you notice here, we have our Asian range in our central bank dealing range. We have this liquidity, right? This trend line of liquidity, right? We have some equal highs here, equal highs in here, right? But the lower end is jagged. So we're looking at this as the draw on liquidity, right? Because these smooth tops are going to be want to made jagged. And see, the simplest kind of way to look at where's liquidity is where's price the smoothest at, right? Where is price going to want to draw to as liquidity, right? So we have higher time frame sell side beneath here. We also have this volume imbalance as it drew to fill in liquidity. And then what I also like to do, right, which we talked about in one of the other classes, is the central bank dealing range. We're going to want to see price come down at least one or two standard deviations bearish or bullish, right? In this case, where we open up at midnight and we're dropping lower, um, higher time frame sell side lines up with almost one standard deviation from the central bank dealing range, right? But more simply put, we have a higher time frame sell side, and we have draw on liquidity here. So we're gonna be looking for price to want to come here, take out liquidity, and then this be our draw back up, right? So we play price forward, we get just that where we sweep price into London, right? So now we have this bearish fair value gap, right? In here. So are we looking for price to come in here and continue lower? What do you guys think? Based on everything we are just talking about with our analysis and our draw on liquidity, you think price will tap into here and then we continue lower, or we tap into here, disrespect it, and drive higher? What do you guys think?
Take
You can
out
tap.
equal highs.
Yep, exactly. Goomba said the chart says ES4. Yeah, this is just an example. We're going through top down analysis.
Didn't know that. Okay.
So right? Price taps in here. Another thing you want to think about is time, right? We're not aligned in our London kind of kill zone from 3 to 5, and we're not aligned in New York even close to 8:30 or 9:30, 10, right? We're right here at 7. So that's one of the most important things too is waiting for time and price to line up, with the most important element of all of these concepts being time. Okay. So we start to drop there. We take out liquidity one more time here. Right. So we disrespect this fair value gap, close above it, drop down to the 15-minute. Right. So this fair value gap is gone. So now we're hunting for an entry to take out the Asian highs here. Right. We're coming close into, we're at in that 10 a.m. Right. So now we have time and price lining up to hit these targets above. So what do we have here on the 15-minute? We have this 15-minute bullish fair value gap here, right? This is that liquidity sweep here at the 9:30 open, right? So your Judas from 9:30 open was down. And then we just start to shoot higher. Okay. This was that sell side. This was a short-term sell side. So we have this 15-minute fair value gap. Do you guys see any other PD rays in this price action from 6 to 10?
Is that down black candle and order block? The
Yeah,
last one?
that you have that too. Yep. There's one more in here too. But this one's correct. That's an order block, because if we go to the 5-minute, we have come on, computer. These consecutive down close candles in here, right? Overlapping with the fair value gap in here. So looking for one more PD ray. Word block.
I'm less familiar with them, but is that a breaker block?
Yep.
Could you walk me through that though? I'm kind of guessing on that one.
That's okay. Where would be your guess?
I'm less versed in breaker blocks in general. So like I'm not entirely sure what I'm
Okay.
looking to identify with those.
So we have this swing low here.
Yeah.
Then we have a swing high,
Yeah.
swing lower low, and then the price drives higher and closes above with the candle body. This swing high.
Yeah.
So we have a false breakout to the downside, and then aggressively take it away. Candle body closes above this high.
Yeah.
And what makes it a stronger breaker block is that we left this fair value gap on the 15-minute here.
Okay.
So it's these last two up close candles before the manipulation down,
Okay.
right? So these candles in here were the last two up close before we manipulated heavily down to take out the sell side, right? So this is your manipulation. Make this like red so you can see, right? Manipulation, and then we move away. So the last two up close candles can be used as support, right? So we drag this over, and I'll make this our bullish breaker, right? So let's see, again, we have the reason why this is a breaker too is the candle. You want to always look at the candle bodies, right? So if you notice, like these lows are higher than these lows,
Yeah.
right? So lows, candle bodies, highs, and then lower lows. Move away, leave a fair value gap. So you can use the wicks as well, but a lot of times I like to use the bodies for the main breaker. So now we have like three things, three PD rays in here that also are lining up with our draw and liquidity here, these clean highs.
Mm-hmm.
We also are in that 10 a.m. window. So we have time and price all lining up here, right? From the 1 hour to 15. Then we drop down to the 5 minute, right? And we can use this 15-minute fair value gap as our long. And you can put your stop just beneath the breaker if you want, and then target 1 to 2. Okay. Go to the 1 minute. Oh, it might not let us. No. Okay. So we have this 1 hour breaker. Now, if you wanted to kind of hone this in your midpoint and lower your risk, you could put your stop just below this midpoint. But to be safe, you would want to put your stop just below this breaker, and then target 1 to 2, which lines up with these highs here, Asia highs. We're also underneath midnight opening price, which is just an added confluence um, that you can use from time to time to add to your bias or your analysis on a trade. If you're underneath midnight, you want to be a buyer. If you're above midnight, you want to be a seller. So price comes back, taps into this 15-minute higher time frame fair value gap. So we never come back to touch the breaker. So you could have gone break even and then got your 1 to 2 in here.
Cool.